All right, ladies and gentlemen. What am I looking at here? Let's see what. All right, let's go ahead and share the screen here. All right, so funny stuff from yesterday's Fed meeting. Basically, a few key. One is Powell admitted that inflation is actually going higher. They adjusted it from expectations of 2.6 to 2.8%, I believe. They also said this is funny. They said that inflation is coming back to being transitory. So if you remember back in 2021, early 2022, the big talking point by the Fed was that inflation was transitory. Well, here we are 4 years later, and inflation is still here. It's not very transitory, is it? They were making it seem like it would be a couple months. And now he's saying that it's going back to being transitory. So it's just bull crap, honestly. Inflation is going to be here to stay unless the markets sort of go down even more, honestly, and the rates come down and the economy grows fast. Again, I've talked about this. Trump is trying to thread that needle of growth versus tamping down inflation, growth and deflation, really. But despite what Powell said, now he also, and the third thing is that he also said 2 rate cuts are expected to come this year. So again, it's very strange. Inflation's increasing, keeping the rates the same, and you're saying we're also going to cut rates down the road. Doesn't make any sense. It's nonsense. I mean, I get that you don't want to overdo it, but they have been behind the ball since 2021, really. The Fed has 2022 with their rate cuts, perpetually trying to play catch up, not doing enough, not doing being proactive enough, and now we're really facing the consequences of that move. Anybody who's watching this, please just subscribe to my channel, and you can talk to me. You have to wait after you subscribe. You have to wait 60 seconds, and you can comment. I'd love to hear from you what you guys are thinking. But so that's after the Fed meeting, markets rallied pretty good. Pretty much on a broad basis too. I mean, we had everything rallying because I suppose the 2 rate cuts are still on the table for this year. If we go to technicals, don't lie, ladies and gentlemen. This 5,700, which, well, it actually got to 57. It got to 57.16, which was actually above the 200-day moving average. And briefly, so this 200-day moving average, you'll see we haven't sold under that since 2023, I believe. Yeah, November 2023. So the fact that we dipped below is actually a bearish sign, and that's a key. Oh Lord, that's a key resistance line. for the markets right now. And both SPX, SPY, QQQ, they all dipped below this 200-day moving average last week. And as you can see, look at this. And this is really interesting. We've had 2 bounces against that line, against the 200-day moving average. That's not good for the markets, right? Downward shift today. Now, will be interesting as we get a third bounce. 3 bounces off of a resistance line is typically considered pretty bearish. Will be interesting to see if we get that, if we do sell off and then get a third bounce there and then go down for a major leg lower after that. We'll have to wait and see. It remains to be seen. But I will tell you right now, you see these people buyers are really trying to push that price up. It it touched it here on the 17th, briefly breached it here, but ultimately sold down lower to close off the day. We did not breach that, and that's a key resistance line. The fact that we did not breach that, we haven't breached that on 2 attempts, is bearish to me. It's a bearish setup to me. So, and you can look at the same thing. Let's look at SPY. You can see the same thing on SPY and QQQ. So now futures are down. Thank you. About 0.5%. So I think we're gonna have a red day today. Let's check. I'm curious to see, because yields are falling, dollar might be falling as well. Yep. All right. So this is a key again. Japanese yen to USD. Check this every day. The yen strengthens. Liquidity gets pulled out of the system because of the yen carry trade. It's not perfect apples to apples, but you can give you sort of a directional bias for the day. The fact that the yen is surging pretty good right now. Dollar's weakening against it leads me to think that today, again, we're going to have a red day again, a bounce down, probably to end the week. I think we're going to end the week in the red. Yields are coming down, even though this ain't loading. But yields dropped. Yields are dropping after that. So that's good. Again, yields come down. There's more investment. There's the housing market gets unlocked. And this is a big drop. We're so close. I think in the next month, we might actually dip under 4%. If we dip under 4%, that's going to be real big for housing, for autos, loans, for many parts of the economy. So watching that. Again, you see everything rallied hard yesterday. So let's look at some of the, now that people are that great. But you can see, everything rallied hard, sold off again for our lazy trades. We're looking for it to stay about below this level. So it's, glad we closed out that trade yesterday before the meeting, but if we'd held on, probably looking pretty good today. Some things that's interesting is the oil stocks, as you'll see here, it's not doing good, right? Walmart's talking about how people are pulling back. Costco's talking about how people are pulling back. The American consumer is hurting. Now, you could ignore all of these signs and say, well, the economy is on, good footing because, whatever, because that it's not. It's not on good footing. People are hurting. I do think that we are going to hit a recession sooner than later, maybe before the summer. We'll see. I'm curious. What I want to do some research on is when recessions typically. I'm pretty sure that the markets usually, and the recessions, I don't know if there's like a time they start. I wonder what the historical data is for when recessions typically start. Could be interesting to see. But I do think that if there's no structural issues that sort of predetermine when a recession starts, in the fall or something. October is usually kind of a disappointing month for stocks in the economy. A lot of crashes have happened in October. I do think we can hit it before the summer. So and look, it's not bad, because if you zoom out, on the monthly for any of this, QQQ, look, we're in correction territory, but we're in correction territory. If you look at the longer term time frame, we're still up huge, right? Still up really, really big. And, the moving average on the monthly we're still far above that. So if we were to drop, this would probably be about 215 for QQQs. That's a pretty significant drop. On SPY, let's see what it would be on SPY. It would be about 300 or so. Now, I don't personally believe we'll hit that low. I could see, though, a retracement back to the 400 levels. I think 400 on SPY, about 4,200 on SPX is what I'm looking for if we do fall. So you can see here about 4,200 right here, which would take us back to October 23. So about a year and a half of gains erased. It's not horrible. It's not going to be great, but the thing is, it's going to provide a good rebalancing point, time to buy, because stocks are pretty overpriced right now. It's hard to find good entries on, if you're looking to buy and hold Apple stock or Nvidia stock. It's kind of hard. It's kind of hard to want to buy it at this point, even though Apple has been selling off. Again, if we go to the monthly on Apple, you're still looking at, a ton of upside over the past 2 years, right? So Apple, even May, look at it. Even since last May, we just had a huge run up. So it's going to be some retracement coming down the road. It's not horrible, right? Again, just buying opportunities for these stocks. They were way overvalued, I believe. I think Apple is trading at 65 PE. All the big tech stocks are. So one bright light in the market is oil stocks. I think I'm looking at oil. I'm watching oil stocks. There's a few bright spots. One is oil. I talked about this in the newsletter, but this story is pretty insane. And Guyana, French Guyana, South America, right? Tiny little country where the Jonestown massacre happened in the 70s. You've all heard of that probably. Don't drink the Kool-Aid, right? They discovered an enormous amount of oil, and it's actually a source of tension between Venezuela and Guyana, because Venezuela is right next to them, and they say they have claims on this territory. So it'll be interesting to see which companies, and they're in the process of building out their refinement or extraction capabilities for that. We have, and of course, Venezuela itself has enormous crude oil deposits as well. So you can see here, CVX, I think let's check this out, because I've been watching Shell. The question is, which company is going to get the exploration rights for these oil reserves? Let's just check out. Sorry, it's slow, ladies and gentlemen. I don't know what's going on with my connection. Yeah. So Chevron's up pretty good. See, the wave indicator confirms that this would have been a pretty good stock to buy, even just yesterday or Tuesday. But a lot of upward momentum, a lot of good trend there. I wouldn't hate even getting into this stock now, honestly. We're still significantly off all-time highs. And if Trump really does want to lower energy costs, these companies are going to improve. You can see broadly, the industry is rallying. Oxy still very beaten down. Hasn't no wave indicator has no confirmation with the wave indicator yet. But you can see that the 9 is about to cross over the 20. I think if it does, we could be looking at some good movement here. Getting at least putting it on a watch list. Looking for some trend support from the Arun oscillator down here as well. That'll be interesting to see how that plays out in more domestically oriented companies as well. Like you have Devon Energy down a bit pre-market. We'll see how it shapes up when the market opens here in just a few minutes. And again, want to look for some trend support on the Arun, but 9 looks like it's about to cross over the 20. So I like that. Let's look at Shell. Shell's just soaring, yeah. So really like Shell. I'm sure that's a wave indicator, yeah. Again, starting about this week, oil's just been skyrocketing. And you would have gotten a good old trade using the wave indicator to find that. Let's go to my watch list. So there's another cool sector, and it's defense. So I guess macro wise and macro, on the macro level, obviously Trump is making radical changes to the U.S. government. There's a few people that you definitely do not want to piss off. If you're interested in making radical changes to the U.S. government, you want to keep them happy. And one of them is defense companies because they are powerful. And, the strikes on Iran, the strikes on the Houthis, the fact that Europe is increasing its own security budget. Here's the thing. Europe says they're increasing their own security budget because they want to, fight Russia. Good for them. Let them do it. Where are they going to get the munitions from? Where are they going to get the technology from? American defense companies, right? So defense is a bright spot. I like defense. Kratos right here, you can see, has been in a strong upward movement for quite a good while. Some of the other, like Lockheed, are also, I believe, are experiencing some decent. Yep. Not as strong as Kratos, but Lockheed, Boeing is kind of, it's increasing. It's going up. Boeing's, they have issues with their planes. Boeing's my least favorite of the defense stocks, but I do like Northrop Grumman. You can see again, they've just been on a tear recently. Coming off a bit, getting a little hot. Might be waiting for a retracement there before getting in on that. But it's not just American defense companies. Euro defense, again, Europe's increasing their defense budget. I mean, and they've basically since early February, so about 2 months now, they've just been soaring. You have BAE Systems, Airbus, which Airbus actually is in a good position, because Boeing has so many problems. When I fly, I'm always happy if I'm on an Airbus rather than a Boeing because they've had so many problems recently. ThyssenKrupp is a German arms manufacturer. Germany is obviously the industrial base of the EU. They've deindustrialized for the past 10 years in some absurd green hysteria, but if they do want to actually have a domestic defense industry, they will have to reindustrialize. ThyssenKrupp will be a beneficiary. You have Thales. I'm not sure what country they're based in, but again, increasing, going good. Leonardo is a Italian company. You probably guessed that, Leonardo. So all of these European defense companies are pretty good bets in my book for if you're interested in longer term buy and hold. I'm curious to see. Let's look at gold. to see what's going on with gold prices. So they rose yesterday, down a little bit pre-market, or I guess not pre-market, they're always trading, but down a little bit today. But gold's, 3,000 gold was a pipe dream, just a little while ago, and we've reached that. Likely going higher, right? There's been a huge bullion drive from American banks to get gold into their own coffers, into their own holding. A lot of it's been transferred away from Britain, from the UK, into Wall Street, into New York. Why is that? Maybe they are worried about a recession. I don't know. Possibility. That could be one of the reasons why. Let's look at Walmart. Again, Walmart's one of those companies is really registering a lot of hurt on its consumer base. They're sold off pretty hard. No real entry. I'm not really interested in a put right now based on just the recent selling activity or a call or, shorting or longing on that. Costco is the same. And we could go look at it. It's just going to be beaten down as well. Really beaten down. So 5 more minutes here. I want to talk about the levels for today. Let's go back to the daily on SPX. And don't forget to like and subscribe this video. Checking how many people we got. Got a nice number of people on. So just like and subscribe. You can comment and chat. So, SPX doesn't have any pre-market data, but it's going to be down just like SPY is. So again, really the biggest level today is again this 57.10, 57.15 or so, bouncing off that 200 DMA. If we bounce off of this and we sell off lower, I do see support at about 54.20, right? So about a 300-point swing. Probably won't happen today, but by the end of next week, I'm looking at this. It's a support line. I sold some spreads, some bear spreads at the line about the 57.15 level. So I don't hate that trading. I talk about this in the newsletter. I don't hate that trading strategy right now of selling spreads against this 200 DMA, at least until we break it, because again, that is a good resistance line, and I think that it's going to be hard. It's going to be hard to break it with the structural issues facing the markets right now. So, just an idea. Let's look at some of the China stocks. So people have been piling into China recently. They announced an enormous stimulus, I believe, last month. But I do think that game is going to come to an end soon. We're having, Baidu, big old sell-offs in Baidu. Let's see, actually might be some put signals available with the wave indicator. Let's look. All right. Was a put ever? No. All right. I'm going to add this to the watch list actually, because I'm looking to maybe for my wave indicator, for my wave trader members, looking maybe shortly here to go short on that or enter some puts. Baba is another one that's selling off. A little bit. Again, enormous run back from January to today. I do think that the party is going to at least pause for a second, come back to a little bit of retracement. So I'll just add that to the watch list, see if that hits it. And one more thing before the markets here, with 3 minutes here before these markets open. So again, this is I recommend doing this. I do this every day. I think it's a important thing to do, especially now. The yen carry trade, obviously, talked about this a lot if you've been reading the stuff. Japanese yen USD, right? Usually, this is basically liquidity measure of the money, of the international money supply. The yen rises, that can mean liquidity is getting pulled out of the system. So it's up yesterday, it's up today. Another data point to why I think this is going to, at least on the day, we're going to have a red day today. Japanese yen rises. It pulls liquidity out of the system because the yen carry trade. I talk about this a lot. I don't want to spend too much time on it, but basically it's, 0% interest rates in Japan for the last 20 years. People took those bonds, flipped them into higher yielding assets, then use those assets to invest in stocks, U.S. equities, crypto, all that jazz. But if that rises, people pull the liquidity out of the system, sell the higher yielding USDs to basically get margin called on the bonds. And again, like I said, we had this little mini correction back in July, and you can see the yen this is when basically the Japanese government stopped doing yield curve control. They said we're ending 20 years of the yield curve control regime, and the yen just skyrocketed. And it's been came down a little bit, but it's been solidly above where it was for a while, where it was prior to the summer. So looking at that every day, and we can just look at BTC to USD just real quick to see where crypto is before these markets open. 85 recovered a little bit, big old sell-off in crypto recently from 110 to 85. So, but 80 does seem like a good support for Bitcoin, and having a little bit of recovery on that. XRP is another one. They just won a big lawsuit, so that's probably soaring. Yeah, it went up a little bit yesterday. It's one of the big name cryptos. So markets are open. Let's see where we're going. Well, we're opening down. We'll have to see where we go. We'll talk about one of these strategies for trading. This is opening range. So you'll see here, I like this strategy a lot. Wait for basically the first 30 minutes of the market. So 9:30 to 10, create the opening range. Take the prior day highs and lows first. So for instance, yesterday's the highs were, we can just move this line up because this is not particularly needed anymore. Yesterday's highs, yesterday's lows. And then, so we have yesterday's lows at 56.24, yesterday's highs at 57.16. So with the bearish bias we have today, what we're going to be wanting to see is the price action breaking below this 56.24 line. But what you want to do is, and I did this yesterday here for my bargain bin traders, I think folks got a pretty good win on that one. But basically what it is you take the first 30 minutes this is on the 10-minute chart. So you basically plot, the price action box, lows and highs combined with the PDL, highs and lows, the prior day lows, then PDH, prior day highs. And then when it breaks above that, you look to confirmation to go long or go short. We ended up going, and this is combined with the 9 and 20. Warrants a longer discussion. We can break this down in a future video more, but we went short. Actually, our money price there yesterday on the bargain bin side was 56. Was around 56.40, I believe. I think so. I think we hit it almost perfectly. But using VWAP, using the 9 and 20 crossovers on the 10-minute chart, and using those prior day highs and lows to sort of anchor the price action. So we're opening up a lot lower today. We'll see, getting some buying pressure here. We'll see. We will see how it happens. I'm probably going to be sending out a bargain bin trade later today. So if you are in that service, be on the lookout for that. But yeah, that's what I got, folks. That's the pre-market wrap up. Pretty fun, a lot of stuff to digest. We'll see what happens today. But appreciate you all for showing up. And don't forget to like and subscribe. We'll be doing this. We do this every Thursday pre-market. We do a Tuesday at 11 a.m. We do a another live stream just talking about, the week, what's things looking like for the week. And then we do this one on Thursdays at 9. So, show up for that, all the future ones. Thank you so much, ladies and gentlemen.